And typically, someone will follow us along for 6 to 18 months before they even invest in a deal. We don't want to use sales tactics or pressure tactics or anything. We want people to get comfortable with us to the point where there's a baseline level of trust.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome everyone to today's Hero Capital Raising Show. I'm your host, Tim Mai, and today I have a good friend and an awesome guest expert on the line with us, Mr. Elijah Brown with Gohart Capital. Elijah has a wealth experience in this whole world of equity brokerage service, as well as fund of funds, capital raising. He's been a real estate investor, an entrepreneur, an Army officer, while working as an investment analyst for Bank of America, later as a manager for Health Peak Properties, which is a S&P 500 REIT. Elijah developed a love for real estate and began raising capital and acquire over 2,500 units across the United States. Elijah holds a BS in Business Administration from the University of Southern California Marshall School of Business, and has raised over $20 million in the last few years that he's been in this syndication space. So with that, let's give Elijah a big welcome, y'all. Woohoo! A big Texas welcome.
Thank you, Tim. Appreciate it. It's such a pleasure to be on. Thank you.
Yeah, definitely. I'm super excited to have you on today. Yeah, I'll start it right out, right? Everyone knows raising capital in today's market has been challenging and for a lot of people. And so I'm always excited to interview people who are currently raising capital, actively raising capital successfully to learn what is working in today's market. But before we jump into that, love to hear a little bit about you and your background as an investment analyst with Bank of America and with the REIT. And what is it that piqued your interest in transitioning over here to the syndication space and becoming a fund manager?
So my interest in all of this actually started before I entered the corporate world. I went to school at US in their Marshall School of Business program, and I thought that I wanted to go into investment banking. I actually wanted to be on a trading desk. I was going to trade stocks and eventually end up at a hedge fund and be an equities trader. And I ended up getting an internship at a hedge fund, which was really cool, and realized very quickly that lifestyle was not intriguing at all for me. Yes, it's very, sexy and fast paced, and there's a potential to make a ton of money, but it comes at a huge cost. And that's your sanity, your mental health, your time, literally everything. You're up in the middle of the night trading markets on the other side of the world. And then when things go wrong, which they often do, you lose everything. And so it's a very volatile type of career. Anyway, I was watching a lot of YouTube videos, and I stumbled across some channels that I'm sure most of you have heard of, like Bigger Pockets. One of the guys is actually Phil Pustajovsky, really good guy. Chris Crone, Graham Stephan, a few of the YouTubers from 15 years ago. Realized after watching a ton of these videos that I realized that real estate was the best way to generate wealth and eventually become financially free. And so I set off on this goal to become a real estate investor. And I was a sophomore in college, and I just literally had no idea what to do. I had no money, I had no credit, I had no experience, but I knew that I needed to buy a rental property. And so I got my cousin and my best friend together, and we watched all these videos together, and somehow I convinced these guys to go in with me on a crappy little $140,000 single family house in Orlando, Florida, sight unseen. And we put our money together and applied for the loan, bought the property, and put a tenant in there. And that was the beginning of it all. And this was all before I ended up getting a job at a real estate company.
I see. Very interesting. Yeah. So share with us your journey now in this syndication space, what that has been like. And did you raise money at all when you were with the other REITs, or in this syndication business is the first time that you started to raise capital?
So it's funny because I was syndicating and raising capital and selling securities before I even know what it was or what I was doing. My very first deal, I got my best friend and my cousin to put up the money because I didn't have any. And so I was raising capital to do deals from day one. We ended up doing 3 more of those single family homes. So we did 4 in total. And then I ended up getting a job at the real estate company out of school. It was an analyst position. I was doing asset management and underwriting, and I had a mentor there who told me that I would need to accumulate 300 single family homes to really make any money, and that I would do this a lot faster if I just bought some multifamily buildings. And so we ended up buying a 6-plex. I convinced a number of my coworkers to invest in that with me, still syndicating and raising money without knowing what I was doing or the legality of it. Essentially, I just thought I was doing joint ventures. What I was really doing was selling securities. And so I did that a bunch of times, ended up flipping a lot of small multifamily buildings in Florida and Arizona, and got to the point where I didn't really enjoy being an operator. It's a lot of hard work, especially when you're out of state and you have to manage all the fires on a daily basis. It's brutal, especially when you don't have the experience of the track record. I'm grateful that I was naive enough, or as I like to say, dumb enough to take risk like that, because I took a crazy amount of risk in the beginning and I got very lucky that it paid off with a bull market. I had the best 5-year market run ever. And that's why I was able to sell a bunch of those properties at the top and essentially generated enough wealth where I could now just be a passive investor or switch my business strategy to doing something else. And that's when I really made the decision. This was a couple years ago. I made the decision that I just want to play a smaller role, do what I'm good at, and raise money for other people's deals. And so I started doing fund of funds, essentially just playing one small role, which is just raising money and doing some due diligence. And so I've been doing that for the last couple of years, and that's been going really well. Obviously, you don't make as much money not being the operator, but you actually end up getting paid more for the amount of time that you spend doing it. And so that's what was really attractive to me about it.
Yeah, let's dig deeper into that, because a lot of people don't understand that. And I try to explain to them, but it's hard to get over that mindset of the way to do deals is go and source the deal and do the due diligence and put up the earnest money and all of that stuff that we've all been taught to do, the A to Z of a deal, right? And so this whole idea of doing only one small part of the deal as a fund of funds manager, I think it's a newer concept for a lot of people. And so let's speak into the pros and cons, right? So let's start with, you mentioned you started out buying small multifamily, going through the raising money yourself from friends and family, going through all of that versus where you are now. So you have that experience probably more than most people. So share with us the pros and cons of starting from ground zero, being an operator, to doing the fund manager. And it might also too address about like personality type, maybe if it plays a role into that, because some people might love doing asset management, might love hunting down the deals. So doing the operations might make sense for them. So yeah, let's talk about some of the pros and cons of both of those type of business models.
It's funny because when I got to college, my parents said we're not paying for school. And any of you who are familiar with USC, it's $300,000 for a degree. So I walked on down to the ROTC office and got myself a full tuition scholarship in exchange for joining the military. And what I learned through that experience gave me what I needed to become an operator. For people who haven't dealt with extreme levels of adversity or have those types of discipline and leadership skills, it's extremely difficult to do anything like this. Some of the things that I ran into as an operator that I really I got through it through sheer perseverance, but that were really difficult. Dealing with issues like the property manager stealing, lying, cheating, and having to manage that from out of state, having to review everything on a monthly basis and then have those difficult conversations with people who are working for you, who are clearly stealing from you. You have to know when it's time to put the hammer down. You have to know when it's time to let things go. And it's really hard to do that, especially as in my early 20s, not having any experience, not knowing what I was doing. I had to learn all that stuff the hard way, being taken advantage of. I didn't like that very much. Same thing when it comes to managing renovations, especially when you're out of state. These contractors are going to lie, cheat, and steal and cut corners and do everything wrong, and you'll be left holding the bag. And that happened many times. Luckily, I was doing this during a bull market. I got very lucky that cap rates compressed by 2% while I was doing this. And there was high demand for rentals. And so my rents kept going up. I got out of it relatively scot-free, but it was at the expense of my sanity. And I really didn't like that. There's a million things that go wrong. For example, not having had a business during the 2008 financial crisis, I wasn't really aware of the dangers of using short-term debt. I ended up using bridge loans to get into a lot of my deals. And again, I got very lucky in that I was able to refinance all of those and not lose my properties. A lot of people weren't so lucky. They ended up losing their properties to the bank. But I, no joke, had to spend 10, 11 months of my life in misery trying to figure out how to refinance all these loans. I don't want to do that anymore. I don't want to have to deal with problems like that. I'd rather just raise money on the front end, invest in the deal with a limited type of liability, and make my money that way.
Yeah. And so it's of course there are a lot of operators out there that have been able to make it very successfully. And I noticed that, I don't know if this is 100% true or not. It seems like the guys that have strong operations background, they tend to be more like engineer type of people, personality. And then as a capital raiser fund manager, we're all about the relationship business, right? Like we're in business to build relationship. We're not in business to crunch numbers. We're not in business to manage people, manage the day-to-day. We're all about high level relationships. So share with us a bit about that.
Very good point. They're completely separate businesses. I'm very lucky that I was able to get out of most of my deals. I have an average IRR full cycle of 71% or something crazy number. Clearly not because of my skill. This was mostly all due to the market going up in Phoenix, Arizona, and Orlando, Florida. But I'm not good at doing operations. I'm not that engineering type. I'm not that hardcore analyst type that's going to put in the actual work. I'm too lazy. I'm not good at it. I'm too distracted. I have ADD. I gravitated more toward the relationship side of the business, which is a completely different business. It's more about investor relations, marketing, sales, very little to do with real estate. You have to understand it completely, but it's more about building relationships and sales and marketing. And so it's been an interesting ride to completely pivot my business to being just focused on something that's so foreign to an operator.
Yeah, I agree. And that's how I got into this industry and gravitated toward capital raising, is because I'm the same way. I love the relationship side of the business much more so than the brick and mortar, the numbers side and the management side of the business. And I also find, at least for me too, the relationship side is the most leverageable part of the business that you can do, because it's the one part of the business that you can build relationship once that can serve you for your lifetime, your investor's lifetime, and possibly even their inheritance or your inheritance, right? If your kids take up on the business, your kids could be dealing with your investors' kids to help them invest their money. So it's like it's just so much leverage to, that goes along with that relationship. The other side to it is that it is a long-term business. So you do have to get good with that relationship building and nurturing, and liking people definitely help. So share with us, Elijah, what have you found to be helpful for you to attract investors and nurture that relationship?
And I think you made a great point. But before I answer that question, you were really hinting at what is the best use of your time. And so spending a bunch of time up front to make a relationship with someone for the first deal, and then on subsequent deals, you're just forwarding an email or shooting a text message, and that person invests $100,000. And if you're standing to make, let's say, 20% on that money throughout the lifetime of the deal, that's pretty good. You're going to make $20,000 from forwarding an email. That's a good return on your time. So I think that's awesome. Now, your question about what I do to raise money. My system is probably similar to most of the people who do this through LinkedIn, but I also have a few unique things that I do. And so at the very top of my funnel is thought leadership. I'm coming on this capital raising party, or I'm posting on LinkedIn. And I was posting on LinkedIn 3 to 4 times a day for years straight. And every single month I would go and review what stuff's working, what stuff's not working. And I would tweak my content to match what my audience was looking for. Essentially, I would just continuously improve my LinkedIn content over and over every single month till I got to the point where my account was growing quickly and all my posts were getting between 10 and 100,000 impressions, which results in leads. Yeah, so that was working really well. I realized if you can figure out how to provide the audience with a tremendous amount of value without the expectation of anything in return, it comes back in tenfold. And so if you can just put yourself in the other person's shoes who's reading your content on LinkedIn, think what is so valuable to them that they would actually pay you for it, something that's so valuable to them that they want to pay you for it. And then you give it to them for free, and you take their email address, of course. So that's the top of the funnel. So you'll see a lot of my content it's a mix of educational stuff that I think will provide value, and then also free products, stuff like Excel models, ebooks, lists, webinars, different things that I think people would pay me for, but I'll give it to them for free in exchange for their email address. You'll see me post a lot of that stuff. So that's how I bring people into my funnel, and they come in as a non-substantive lead. We tag them with no pre because we don't have a pre-existing relationship with these people. We don't want to send them deals. Even the 506c deals where it's legal to send to anyone because it's general solicitation. We don't send people deals unless they have an existing relationship with us, because we think the conversion rate is going to be a lot higher if we wait to sell them stuff. So they come into our system, and we start off with an educational nurturing campaign. What this is, let's build a little bit of baseline level trust with these people so that they understand us, they know us, they like us, they know what we do and how we provide value. So it starts out with an email of me wearing a military uniform saying, here's my story of how I got to this point where I'm at. The next email is, here's how I provide value to my investors by selecting the best deals. Here's a more in-depth look at the types of deals that we invest in. And I go through this nurturing rabbit hole for about 10 weeks with people. I've seen people do it for 3 weeks, for 5 weeks. I've really just only done it with 10 weeks. And so I do that. And at the same time, they're in my system. My partner is picking up the phone and calling them, seeing if we can establish an actual relationship with these people. Let's find out what their goals are. Let's build some rapport and see if we can put them on our substantive relationship list. So when it comes time to raising money, we know we can call them. I also do a monthly newsletter, and this is, I don't think it should be any more frequent than once a month because they're already getting a ton of emails in their inbox. This should really be not something they see from everyone else. Everyone else just says, here's what's going on in the economy. Everybody's producing that content. They can get better information elsewhere. What I like to use my monthly newsletter for is an update on how I'm providing value to investors this month. So I'll talk about my deal flow. What deals am I seeing? What's going on within the deals that I'm seeing? What are we pursuing? How are we reducing risk? What are our transactions and stuff? I want the investors to know what we're up to. So I do that monthly newsletter. And really the point of that is to just build trust for when it comes time to raising money. The part where we differ from most people who are doing this strategy is we add like a technical approach to it. So everything is automated from the point where they download the lead magnet in LinkedIn. Our scoring system is top notch. So we use ActiveCampaign, and anytime anyone clicks on anything, opens an email, reads anything, responds to anything, soft commits for a deal, visits a data room, texts us, has a call with us or anything, they get points added to their score. We do two types of scorings. We do engagement scoring, so any interactions, and there's different weights and levels of points for different stuff. And we also do likely to invest scoring. So for example, if someone soft commits to a deal, we know they're more likely to invest. Or on my form, if they indicated that they want to invest more than $500,000 within the next 6 months, then they get a higher likelihood to invest score. So we're keeping track of that. And so when it comes time to actually raising capital, we've got a list of our top 100 out of 5,000 or so that we know are high probability, and we're going to give them a call first. I'll just pause here to see if you wanted to
Yeah,
jump
no,
in.
I love that. We're gonna, yes. I was like, keep going. But I do want to circle back some of your points here.
Yeah.
I want to make sure it's clear for everyone. So I want to start with your mindset of thought leadership to begin everything with. And you mentioned being interviewed on podcasts like this here. What other things, how do you define thought leadership, and how does someone who, let's say, brand new to the business can position themselves as a thought leader?
It's hard, Tim, because you really have to be doing something for 10 years or 10,000 hours, whatever it is, for a long time to get to the forefront of your industry, to then even know enough to be able to have unique ideas. And so 90% of the thought leadership that you see is really just regurgitating stuff they've heard from other people. And I'm guilty of that too. Most of my thoughts are just combinations of other things I've heard that stuck. But it's very rare to see like unique new ideas. But if you're just getting started, you use what you can, you try. But perhaps thought leadership might not be like the best strategy, because obviously you don't want to try to purport that a lot more than you do, or be, I don't want to say be the imposter, but you don't want to be the guy who doesn't know anything and trying to the blind leading the blind.
Right.
So
Yeah.
I would say try to learn as much as you can and put in the hours so that you actually have something to say when it comes time. Otherwise, there's different strategies. You don't have to be the one coming up with the unique ideas. You can be the one educating on. If you ever go to a college class or like literally any high school class or college class, the professors usually, like 99% of the time, they're not coming up with anything new. They're teaching a certain curriculum that they were given to in a textbook, and that totally works. The college industry is the largest money maker, and they're typically not putting out anything unique or new. So I'll just say that.
Yeah, and I'll share my personal hack, and you guys get to witness my whole journey since I've been in this industry 2.5 years ago, is to interview other thought leaders. Because when you're interviewing other thought leaders, people see you and that leader together, and so it elevates your leadership level. And so being that facilitator, being that host that brings education value to them, even if it's not directly from you, also helps a lot. And I've learned so much in the last 2.5 years. I've interviewed, I think, around 120 people now. Oh my gosh, I've gotten to learn all the different aspects of the business it's been an amazing journey. And so that could also be a good hack for you, for those of you who might feel like you're so new, you don't know a lot. But as long as you can, it's about you bringing value to the marketplace, right? And how you get, whether that value come from you personally or that value come from someone else that you able to source and bring, that
Oh, that's
also
such a
has a
good
lot of,
point.
yeah.
That's such a good point. As long as you can figure out how to bring value, that's all that matters. You don't have to have unique ideas. One example, something that works for a lot of people, talk about your own deals, what went well and what went wrong. Post a picture of the property that you invested in and all the lessons you learned from it. That is highly valuable to people.
Yep, 100%. Yep. So regarding your LinkedIn, do you post daily or how often do you post on LinkedIn?
So I was posting 3 to 4 times a week. Now it's 2 to 3 times a week at this point. I'm taking a little bit of a breather because it can become burnout city and you end up spending. But I would say for those looking to build the presence on LinkedIn that you don't have already,
Mm-hmm.
3 to 4 times a week, probably start with 4 times a week. You should be posting something and don't post a book. Keep it brief, 4 to 5 bullet points and a photo and because nobody actually wants to read everyone's post. Like I scroll through and if I see that their post is like longer than one paragraph, I skip it. I don't want to read that. I don't have time. I want the quick bullet point, something, just get to the point of what's valuable for me. And I know that works with other people too. So that's just a little bit of advice.
I see. Give us some examples of how do you come up with ideas on what to post?
Hmm. That's tough. So there's a lot of different categories. Think about your own deals that you've done because there are a million lessons that you've learned in those, a million mistakes that you've made, a million things that you've done or things that went right even. So you've got plenty of content just within your own portfolio and your own learning and expertise. And then think about what you've learned from other leaders, from other thought leaders and books you've read, stuff like that. And then the most important question is just think what would be the most valuable thing you could say to this audience. And sometimes the answer is nothing. And so I find myself a lot of mornings being like, I don't really have anything to say that I think would be valuable. Like I could just put something random out there. And then I end up not posting because if you're not posting something that's valuable for someone, there's no point because they won't interact with it. Yeah, it's tough to come up with stuff. You got to be creative and it can't be
Right.
boring. Your first sentence needs to be highly engaging. It needs to be like a really good hook to get people. And it's just like YouTube with the thumbnails.
Gotcha. I understand. Yeah. So, guys, I love hacking my way through things. So, definitely go check out Elijah's LinkedIn. So, you give you ideas of what kind of topics is he posting on, right? That gives you idea. I know another capital raiser that we interviewed not too long ago was Jeremy Dyer, and same thing, right? He's really good with that. Sam Silverman's really good with his LinkedIn post too. Do you have other people in our industry that you really like their content that they post on LinkedIn?
There's a few. So I've been getting more and more niche with what I do. So there's a few that I like to read, but are probably not as applicable for everybody. Just
I
one
see.
that comes to mind is actually Jonathan Levy. He's an equity broker and he posts great stuff about what he's seeing in the market at different times. You got to be careful because say like more than half of the posts are just promotional or self-serving and not really valuable. And so it's hard. Like I don't actually enjoy reading my LinkedIn feed because I feel like none of it is really valuable to me. It's mostly just self-serving posts and advertisements. And I don't know if that's because I don't know if that's because of the people I chose to follow or just because that's everyone. But it's yeah, I don't really follow that many. Here's the thing, here's a hack. So 5 or 10 minutes, maybe 10 to 15 minutes before you make your post, go and comment on as many other people's stuff as you can, because that draws attention into your profile. And then after you make your post, go comment for 10 to 15 minutes on other people's stuff. And then as soon as you get comments on your post, respond to it immediately with a long, thoughtful response, like 2 to 3 sentences. And if you get a repost, comment on your own post saying, thank you to this person for the repost. That will help juice the algorithm a little bit. So it's funny because most of the content I'm consuming and responding to is really just because I'm trying to like bring in attention into my own profile. But
I love it. Did you figure all this up on your own, or did you learn it somewhere?
At the beginning of 2023, I wanted to start posting regularly on LinkedIn. And so I watched a few videos on like best practices. By the way, everything's changed. Everything changes every 6 months on LinkedIn. The algorithm completely flips around all the time. So I figured out a few things and then started testing them month after month and figuring out what's working, what's not working, and then adjusting. At this point, I don't actually know what is the best strategy because LinkedIn keeps changing it and I don't have the time to spend with it. I don't have the time anymore to spend 2 hours trying to figure out what the algorithm does. So it's hit or miss. One time, sometimes you'll make a post that you think is trash and then it'll blow up. And sometimes you make a post that you think's the best post you ever made and it never goes anywhere. It's really hit or miss.
What would you say, and it could be LinkedIn, could be something else, but out of all the different marketing channels that you've been using to raise capital, what would you say LinkedIn ranked the top out of them, or there's something else?
So I went super, super specific and niche with my strategy. I'm only doing one lead generation strategy on one platform, on one subject with one audience. And so I haven't even began to explore the world of other stuff. I think I started my virtual assistant started posting a few videos on TikTok, but we'll see if we'll check in 2 years to see if that worked. But I'm taking more of like the Alex Hormozy method of if one thing is working, let's do that and double down on that. Start out in one spot, put all your effort and energy into one strategy, one thing, one niche, and then grow that. Yeah.
Okay, so LinkedIn has been that niche for you then, right?
Yeah, I generated 3,000 leads out of LinkedIn in the past year and a half.
That's impressive. So is it just post? What about cold DMs? Is there a DM strategy behind it as well?
Different things work for different people. And I was actually talking do you know the ladies at Good Egg Investments?
Yep.
So
Julie
one of them
Lamb.
yeah. So Julie lives like 2 minutes down the road from me here in Hawaii. And we
Okay.
met up for coffee this week or last week. And we were talking because she does coaching as well.
Yep.
And she was saying that different things work for different people. It's not just that you need to master LinkedIn. It's different things work for different people. So for some people, outreach on Sales Navigator is the best strategy. That didn't work for me. I tried that for a while. I had a virtual assistant running scripts to people and of course that didn't work. Different people, some people do TikTok, some people just do YouTube, some try it all. But for me, I found that giving away valuable crap on LinkedIn that people can download is the number one way that I can generate leads, and it works. And so I'm just going to double down on that.
Yeah, and the same thing works really well on Facebook as well, because that's whenever you have valuable lead magnets like that, like you say, things that people are willing to pay for, and you're giving it to them for free, it's an amazing lead generation tool. And
Definitely.
I think that's probably universal enough to work across a lot of different platforms. It's hard to come up with a good lead magnet.
It really is. It's so hard. Yeah.
Yeah.
I
So
tell you about one that I tried. So you know
yes.
how the SEC is trying to come up with an exam to allow someone to become an accredited investor. And they haven't agreed on what that exam is or anything. So I made my own exam. I made a 50-question multiple choice quiz in Google Forms or whatever. And it was a really good quiz. I had a bunch of attorneys vet it and say it was good and everything. I tried posting it on LinkedIn like 5 or 6 times and it completely flopped. I think I got 20 or 30 leads out of that. Didn't work, even though in my mind, it was like the most valuable thing I could have provided to people. What did work, it was like a really simple, stupid Excel calculator on like how to do a quick pass on a property that I would never use that I didn't think was going to be valuable or appreciated because there's so many of them out there. And that one brought in 300 leads. So it's
I love
really,
it.
you never know what's going to be valuable.
That's really good. You brought up a couple points that I want to make sure the audience understand. Number one, yes, you do have to try things to really know for sure. Like nobody has the answer, right? It doesn't matter. You can be a total badass lead lead magnet creator, and then you can still flop because until you try, the audience, the marketplace, gonna tell you whether or not that works. So you do have to try it. And number two, you said that the simple calculator that a lot of people give out, but yet it works so well, is a good hint to when a lot of people are giving it out, it's possibly because it works. And yeah, because you're in
It's
the
a quick
business.
solution to a medium-sized problem.
Right.
That's the
Yeah.
key.
Yeah. So
There,
you
number three in there, though, something else that people will never tell you. Even if you have the best lead magnet possible, if you don't market it in the perfect way, it'll still flop. That post on LinkedIn or Facebook, whatever, needs to be so like eye-catching and intriguing that people actually look at it and click on it. If you have a paragraphs and paragraphs of text, nobody wants to read that. But if you say, here's something that I sell for $99, I'm giving it to you for free today, comment tool below, that's it. Four
yeah.
sentences and you're done. Yeah.
I love it. I love it. Yeah, free is not good enough. So that's really good one. Yeah. Like even like I'll give you an example of how I've been able to grow the show. If you guys watch all of my Facebook I'm more active on Facebook than I am on LinkedIn. If you watch all of my Facebook marketing from very day one, like we promote every single one of these interviews, and I work pretty hard to come up with the right headline to gain attention of why people should show up and listen to whoever it is that I'm interviewing. And they understand it's free, and they understand it's a podcast. But yeah, it seems like when you give out away things for free, you have to promote it even harder so that way people see value in it to want to
It's not
interact
free,
with it,
Tim. I
right?
think there's 63 people on here right now for an hour and a half. Hour and a half of 63 people's time multiplied by, these are high caliber folks, multiplied
Yep.
by $250 per hour for each. And you're talking about tens of thousands of dollars being
Yep.
spent right now in people's time. And so
Yep.
you got to overcome that hurdle. What is actually going to be valuable to these people that they're willing to spend hundreds of dollars of their time to sit through?
That's
So
true.
great
There
point.
you go. Yeah, no, you bring up a really good point is that to gain to stop people from whatever they're currently doing to get their traction to opt into you, like you're taking away their time, which is valuable to them. So you do have to think through how to create your posts in such a way that it's worth the value for them to stop and engage with your post and opt in and go through all of your nurturing sequence, which is my next question for you. So your 10-week nurturing that you take them through, is it once a week?
Yes. So that one's once a week.
Okay. And I love the lead scoring. That's such a great idea. Is that built into ActiveCampaign itself or okay.
That's right. So in just a little side story. So we spent 2 years building out our ActiveCampaign capital raising automation system, which is high quality and effective. Actually, my partner Dave is the CRM guru. He built the system out and is an expert on automating the capital raise process and lead scoring and automations and stuff like that. It got so good to the point of there was a business model in that because so many people were asking us for our system to build that out. So we spun off a side business actually of just setting up CRMs. And so my partner Dave does that. I'm not involved with that anymore, but for anybody who's interested, I'm more than happy to put his contact info. He loves to chat about it, free tips and tricks, whatever you want. He'll sit
Very
down with you.
cool. Do you know if he can do that on high level instead of ActiveCampaign?
Yeah, he does both. So he does go high level and ActiveCampaign. Yeah.
Okay,
I'll
good,
put it in
good.
I'll put his email in the chat. Just send him an email and then CC me on it.
Yeah, that sounds good. Yeah, because
Yeah.
I actually been wanting to do that on high level, and so it'll be definitely good contact. All right, cool. So yeah, so people get into your funnel, you nurture them, you don't promote deals right away until until even if they are an accredited investor, you wait until you have substantive relationship with them before you promote deals to them. Is that correct?
That's correct. And typically someone will follow us along for 6 to 18 months before they even invest in a deal. We don't want to use sales tactics or pressure tactics or anything. We want people to get comfortable with us to the point where there's a baseline level of trust. So when we pick up the phone, we're not starting off from zero. It's you've been seeing our crap for over a year now, exactly what we do and how we provide value. Are you ready to invest now?
I love that. So what for those that don't know what a substantive relationship means, what does that involve?
So there's the legal version of it, and then there's the other extra legal version of it. The SEC is very strict with who can and cannot invest in deals. And for 506B exemptions, essentially you can raise money from people who are non-accredited, meaning they don't have the $1 million or they don't make $200,000 or $300,000, depending on if they're married or not. The SEC allows them to invest in deals, but you have to have a pre-existing substantive relationship with these people, and they have to be sophisticated enough to understand what's going on. And the criteria for this is actually extremely vague, but a lot of attorneys have tried to quantify it in terms of specific questions that you need to ask people to form a substantive relationship, how much time you need to, and how many conversations you need to have had with people. Bottom line is it's vague and it's gray, and you really just need to make an effort to get to know somebody and have evidence of it before you start pitching them 506B deals if they're not accredited. And so that's just really up to you how you want to do it. I recommend having a 30-minute phone or Zoom conversations with these people. Try to understand their investing objectives, their investing experience. Try to see if they understand what goes on, educate them, see if they are able to retain the information on how the investments work and what the risks involved are. Those are all things that you can do. Some
Gotcha.
attorneys say have them fill out a survey or do this and that, meet up with them in person. It's really vague and it's up to you, but make an effort and have evidence of it for when the SEC comes knocking. The other thing is the non-legal version of it, which is really if you have a conversation with someone and you build a little bit of rapport, but you don't discuss investments, you've just built trust and you have a relationship and rapport and a friendship, but a lot of attorneys would say that you didn't necessarily meet the criteria of building a substantive relationship for the purposes of investing in deals, but you have now built a relationship of trust with this person. And so I'd say when it comes time to pitching them 506C deals, go ahead and do that. Sorry to confuse everybody.
Yeah, that's good. Thank you so much for that. All right, let's talk about how you launch now that your investors are all warmed up, you have a deal that you're raising money for. What's your process to launch that deal, to promote that deal to your list?
Sure. We've experimented with both like highly designed automated emails and also just basic plain text HTML emails from your Gmail. So we do a combination of both. So we'll look at our highest scoring people and our existing investors, and we'll send our top 100 to 200 people a private email from Gmail or even from ActiveCampaign if you make it look like a regular email. And we'll send them a first look, a pre-launch look. Makes them feel like they're getting in early before the actual launch, which is true. Gives them time to review before everyone else does a couple weeks later. And so we'll start off with that. And it's a really simple email. It's here's like the intro, here's a link to the pitch deck or the data room, the top 3 or 4 highlights of the deal, projected returns, and that's really it. It's really a simple email. And so we collect a lot of commitments based on that one email that goes out. People see it as if we're sending them a personal email to them and giving them special access because they're special. And so we're able to fill up a lot of the deal from that. We then have weeks later a highly designed, customized, automated email sequence and ActiveCampaign that runs on a schedule and is keeping track of everybody's points and scores and adding people to different pipelines for phone calls and all kinds of different stuff like that. And those emails are more of what from some of our sponsors that are sending out like highly designed stuff meant for retail investors. So it's a combination of both.
I see. Very cool. And do you do live webinars when you're promoting deals, or they all pre-recorded videos?
I think I've only done one webinar my whole life.
Ah,
I like most people don't attend the webinars. Most people don't want to sit through them. Most people don't watch the recordings of the webinars. They really want to see the pitch deck, the data room, and then either have a chance to ask you questions on the phone personally or through emails. Um, Also, doing webinars is just a burden. So I don't like doing them and I don't do them. But that's
gotcha.
not everybody. Everybody has a different strategy. Some people, perhaps you, raise all your money through a webinar. And at the end of the webinar, you say who's in and everybody invests. So it's different for different people.
Yeah, for sure. It has a lot to do with how you train your audience. Like they
Yeah.
respond to however you train them to respond. It's so interesting how that works. And whenever you do a raise, do you like I one of the people I've interviewed on this show, her strategy is a bit unique in that each time that she does a raise, she only gives them 2 days to make a
Wow.
decision. Yeah. So you never see her. She does. Some operators will
I don't
do it
like
the
that. That
raise for
makes people
weeks.
feel uncomfortable and pressured. And sophisticated investors need more time to conduct their due diligence. They don't want to be told 2 days. That turns off a lot of people. Even if they end up investing, they feel like they got frisked. And so I don't believe in that. I think a better strategy is to size your raise correctly so that you oversubscribe it very fast. And
Right.
then you're training people that if they want to invest in your deal, they need to move quickly, but it's not like you telling them that they have to move quickly. It's very different.
Yeah. Yeah. She doesn't tell them they have to move quickly. I think she's doing what you're talking about, sizing her
Ah,
deal
I
accordingly.
see.
And but yeah, she does she before she does the webinar to answer the question, she sent out all of the deal info. So from the time that she does the webinar, people put in their soft commit and the deal is closed. It's
That's
a very
awesome.
fast process. Yeah. Very good to know.
I'm jealous.
So what type of deals do you generally raise for? What's your buy box?
So we narrowed down our strategy into a very specific niche of really just, so we did two strategies. And the one I'm talking about is our direct investment strategy through the fund of funds vehicle. We've narrowed it down to a very specific niche of essentially large multifamily buildings in the Sun Belt with a value add or a core plus strategy. And that's really it. They all pretty much look the same. They're 1980s or newer. They have some type of value add component with an experienced operator. The going in cap rates and the yield on cost, we target a very specific criteria. We have very specific return criteria. We need to have 5% cash flow in year one and a minimum 15% IRR. The sponsor has to have at least 5 full cycle deals before we'll start investing with them. We need there to be positive leverage, which essentially just means that the interest rate on the loan is lower than that going in cap rate so that it's cash flowing strong from day one. And after that, it's really just we want to be in primary markets in the Sun Belt, in red states. And that narrows down 95% or more of what we look at. We were looking at 50 to 100 deals every single month. It's a lot. We probably have the most deal flow out of anyone on LinkedIn, out of anyone who's looking at deals in the middle market of multifamily. And we only pursue less than 1% of the deals that we see because almost everything doesn't meet our criteria.
Okay. Have you had much demand from your investors to expand beyond multifamily, especially in today's market?
So people come into my pipeline knowing that I'm the multifamily guy, and then I train them to be able to understand multifamily deals. So not really, no. I haven't
Okay.
even really experimented with it. I tried raising capital for an Airbnb fund. It went all right, but it wasn't a slam dunk by any means. So I'm sticking with what I'm good at. Back to the LinkedIn thing of just doing one thing. I'm doing
I love it.
one strategy, one niche, one geography, one this, one that, one thing, just becoming the best possible at that one thing so that I can mitigate the risk in that. These investors don't need me to do their diversification for them. they're looking to diversify by choosing me and my specific niche to add to their portfolio.
Okay. So most of your ideal avatar investor is someone who's already an experienced real estate investor. Is that correct?
Yeah, most of my content is for more of the sophisticated investor types. I've been making a conscious effort the last 6 months to a year to really be networking and migrating toward more of the family office and ultra high net worth crowd, just based on my other business line, which I'll explain in a bit. But yes, I'm really talking to more sophisticated investors at this point, and that's really my crowd because my content has been the reason why this came about. So a lot of people, they come up with an idea of what their target avatar is that they're going to market to. And then they go
Right.
after that specific target. If you're a doctor, you go after doctors. I didn't do that. I just started posting random crap and seeing who migrated toward my posts. And lo and behold, sophisticated real estate investors started migrating to my posts. And so now I create content primarily for sophisticated real estate investors. And so now my target avatar and people I'm essentially selling securities to are sophisticated real estate investors.
Gotcha. Makes sense. All right. Now let's talk to us about your other business, your equity brokering
Yeah,
business.
sure. And I got to be careful with holding myself out as a broker because I'm not a licensed broker. I don't have a Series 65. I don't have a Series 7. What I'm doing is I am arranging JV and co-GP partnerships, active material participation partnerships for real estate deals. Essentially, what does that mean in simple man's terms? I'm finding operators large checks. If you got a deal and you need $20 million, I'll go find you a family office that'll write that check. They'll come into your deal as a JV partner or a co-GP. They'll play some type of material role. That's why it's not a security. And then I'll get paid a transaction fee when they invest their money.
Gotcha. I think the term now is an intermediary, right?
Intermediary,
That
broker, it's all the same thing. Yeah.
yeah.
Middleman.
Middleman.
Yeah. Facilitator. Yeah.
Okay, I love it. And so the type of deals that you are doing this intermediary for facilitating, are they also like the same type of deals that you source to raise money for your fund of funds as well?
Similar, but with
Generally?
expanded geography and expanded vintage and expanded quality. So I'm not just looking for my very narrow specific buy box. Now I'm looking for a buy box that suits many more people. And so I'm still the multifamily guy, only acquisitions and recaps. We're not doing ground up construction. But now the buy box is okay. We'll take a look at any vintage. We'll take a look at A, B, and C quality. We'll look anywhere in the United States in primary and secondary markets and even a tertiary market if the cash flow is incredible. Look, we're looking at the entire middle market of multifamily now. And roughly 5% of the deals that we review, again, we're reviewing 50 to 100 deals every month, roughly 5% fit that criteria, end up on a Google sheet that I share with family offices and institutions. Less than 1% we pursue for direct investment because they meet my buy box. And then roughly 5% we're also sharing with family offices.
I see. Very cool. Awesome. I bet the audience here would love to ask you questions as well. So we're gonna wrap up this part of our interview. It's gonna sound like I'm ending this interview with you, but we're not. We're gonna transition. We're just ending for the podcast editing portion, and it will transition over to the Q&A. So,
awesome.
Elijah, thank you so much for being on this show with me today. Really appreciate you. You've been wealth amount of knowledge and wisdom that you share with us. Really lots of like cool strategies and tips. I appreciate you so much. I wish I have another hour to ask even more questions.
Thank you so much, Tim. It's really been a pleasure.
Yeah, and then so for our podcast listeners, for those that want to reach out to you, do deals with you, invest with you, learn from you, where would you like to send them?
Yeah, we're looking for co-GPs right now on a raise. So reach out, shoot me an email at Elijah at goldhawk.us. You can check out our website, goldhawk.us. We've got a whole bunch of resources up there. And then for anyone listening, add me on LinkedIn because that's the only platform that I use. So add me on LinkedIn. It's Elijah Brown, and I should pop up.
Yay. Awesome. All right. Okay. Thank you so much.
Awesome. Thank you.